Welcome to today's update video. We will get you guys those daily expected moves for the SPY and the Qs. Look at volatility, look at what's going on with the SPY, because today, with the Fed interest rate decision and some chatting from Mr. Jerome Powell, we do see somewhat of a breakthrough to the upside to do what? Test the high, go make a new one, RSI confirming it. Hey, big move here. Something we were aware of yesterday was the 30-minute chart still being close to that center line, right? Still being close to that center line means if it curls up, we can see another positive move. But the same thing could be said about tomorrow. That is why I am still overall being nice and patient, waiting for the more obvious play, not trying to have to make money or something like that with this kind of Fed event. To the upside for tomorrow, you will have 692.41 to the upside for your daily expected move. You will have 682.73 to the downside for that. That would mean that if we are going to see some kind of retest here, some kind of move that wants to come back in, if we want to keep doing what we're doing, then we should head up, right? If this 2-hour confirmation means anything, right, it hasn't confirmed on the MACD, are we actually going to set up some kind of potential high level here going up to that weekly expected move? Because if this curls up, we're already past that high. We're starting to dabble past this one, right? So it looks like we're going to be pointing directly to the upside weekly expected move. So if the 2-hour is able to hold itself up here, then we can see that continued move. You do not have the exact confirmation on the MACD, but you did get it from the price action and from the RSI. What I would overall say here, though, is the 30-minute chart. One, you want to watch this as far as risk goes. You are hitting the new all-time, or potential to hit new all-time highs. Making that move to 700 by the end of the year is what I would like to see. But if this 30-minute does rotate down, then you would be paying attention to 682.73. But if you're able to confirm down on the MACD, you're rolling once again back down into negative territory. This is why yesterday you heard me saying, hey, I'm out of all positions. I'm not playing around, especially at the end of the year after a good year of trading. Not going to mess around with some Fed thing, because what they do during the Fed is they can shoot it up, shoot it right back down. They can do all kinds of stuff with this. But overall, looks pretty good here. I think the buys that came in look pretty good. If we wanted to see continuation, the 30-minute is not suggesting you have to stop. You are slightly overbought. But there is not a lot here to suggest that this is going to be an awful time. If anything, it is saying, yes, we will continue to squeeze, and we need to remake those 30-minute reversal signals. The only thing as far as risk for tomorrow goes is if you curl down here, you will be going negative pretty quickly. So if you do that early on in the morning instead of squeezing to the upside, but you curl down, you would want to watch for the test of the lows, see if that's able to buy back up, right? That would be a good thing. But if that does curl down and does not curl back up, you could be making a new low as you go and potentially test that 5-day moving average, as you are close to negative territory right now. The Qs on the 30-minute are in the same boat. Now, once again, this is violating a lot of the... it's actually not violating this divergence point right here. So actually, maybe I spoke too soon for the Qs. Now, we have not tested those 5-day moving averages. If the 30-minute crosses down, you can see all it would take is like an hour of selling to really say, okay, we're going negative. So you don't want to play around with that towards the end of the year, in my opinion. Overall, the 2-hour chart is your friend here. So let's give you guys some levels to pay attention to. As we look at this, 633.58 to the upside, 621.64 to the downside. Some tricks and traps happen around this time, so I'm looking for a good opportunity. I'm actually looking for the great or good opportunity, not just the opportunity of some kind of squeeze with some kind of Fed event. That is not how I like to do things, and that can bite you in the butt if tomorrow we just see that this was a trap, and that can overall happen. But as the RSI was able to curl up, as we see the price action closing above the 9 on the 2-hour, as we see the MACD has not curled up, it still would say most of the probabilities are pointing to upside, to that weekly expected move potentially by Friday would be the very probable thing. And you're just watching your 30-minute chart. If that rolls down, you say, hey, we're at risk of failing that signal for the time being. It is as simple as that. We're keeping it nice and simple, right? That's why I have the energy equation tattoo on my arm, because it is complex, but when you break it down into it, it can be explained by 3 little letters. And something that I would keep my eye on here is going to be this last bit of the video. I don't have the most time today, but we will see that the 2-hour chart is still positive. is going into the area we were talking about. We talked about another wave of volatility coming in if we make a 2-hour higher low, or a potential. I mean, you could maybe look, I don't think you'll look for divergences here. I think you're looking for that 2-hour higher low. So I would really pay attention if volatility sticks around in this area, maybe fills that gap, and then you're able to see like a 30-minute divergence by the end of the week. This would mean that by the end of the week, we are setting some kind of trap. Now, why am I overall suggesting there could be a trap? Well, if you listen to the first bit of the week and the first bit of the week this week, I believe is on Monday, we said, well, with the Fed event, you can set traps to the upside after the event, or you can set traps to the downside after the event. And I think that's very, very likely to happen. Now, we're going to pay attention to what that looks like if we end up here. We're going to pay attention to what it looks like if we end up down here. We're not just going to say, oh, we're down here, so it's a trap. Oh, we're up here, so it's a trap. We're going to look inside, but a lot of the time, we see some kind of move with the Fed into Friday, and then we see things pull back generously. So I would be watching out for that. I just want to say this for, if you want any kind of my opinion, I do not like these divergences for the end of the year rollover right now. I think we will need to, at some point, go and remake those. So I do see us extending this for a little bit of time, but we'll see how it forms over the next few sessions. I'm sorry I do not have the most time tonight. I know that you probably were like, I really want to get into it, but don't have a lot of time. I got to go get our picture with Santa Claus. I'll have to show you guys that picture once we actually get that done, but it should be a good time. I got a stupid little sweater with Santa riding a dinosaur, and my daughter loves it, so I'm going to go have a great time. And that's the benefit of staying out of these events and just waiting till things become a lot more clear, a lot more simple. And that's overall what a good trader should do, is practice patience, right? Patience can really help you wait for the good opportunity, not just a lackluster opportunity because we curled up one moment here, but waiting for the actual good opportunity where you see the rhythm really piling up for the charts here. Thank you guys so much. Have a good rest of your night. I hope you guys do have a good one, and I will see you guys tomorrow. Peace out.